Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsarthi, and India seems to be breaking away from the rest of the world. The way the markets are moving, despite US inflation coming higher than expected at 8.3%, US Treasury yields rising, equity markets falling globally, Eurozone bond yields rising sharply, especially in the weak, higher debt countries like Italy. And in spite of all this, Indian markets seem to be moving on its own resilience. The 10-year gsec yield is down, even though it was up slightly today. It's trading at 7.15% levels. The equity markets are trading at close to record highs. The rupee, while touching record lows, has stabilized. So FX reserves have fallen sharply by almost down by over 15%. The rupee seems to be holding on its own at this point of time, and there are some positives for India in the sense that Indian bonds will be now part of the global index of bonds, and that will attract a lot of foreign buyers because Russia, with all its issues, is being shunned by global investors. China too seems to have um, closed down its economy, and that's also not going down too well with global investors. So India does seems to be in a sweet spot, but having said that, it's still got a lot of challenges which it has to manage. If you're a financial advisor, the best place to come is INR bonds partners, where in such markets where globally a lot of uncertainty, but India seems to be doing better. Now, where to invest in fixed income, INR bond shows you the way, the best bonds for your clients with the best of information, the proprietary risk model, and providing the safety, liquidity, and the returns that you require for your clients. Log into INR bonds partners now.
As a financial advisor, my biggest responsibility is to help my clients make the right investment choices. Now, with INR bonds, buying and investing in bonds for my clients is quick and easy. With my guidance on bonds, my clients are happy and I'm getting new business every day. Register as a financial advisor on inrbonds.com to help your clients invest and save better through bonds.
And back to bond bytes, Canara Bank issues perpetual bonds, 5-year maturity at 7.99%. So we have had a lot of banks issuing perpetual bonds, which are like AT1 capital. Now, and this is because credit is growing very high in the system, and banks are requiring capital. We had HDFC Bank raising perpetual, SBI raising the AT1 bonds, Bank of Maharashtra, and many other issuers as well, including NBFCs. All are increasing their capital through AT1 bonds. And now SEBI has restricted AT1 bonds to a minimum of 1 crore. So retail investors clearly are protected because they don't understand the whole structure. But having said that, institutional investors did not understand perpetuals, and most of the defaults in Yes Bank was in the books of institutional investors. It does carry its risk, but in this market, with India seemingly better off and showing reasonably good macro trends, despite global very high inflation, there is a strong appetite for capital raising as well as appetite at the investor level to invest in such bonds. Thank you for listening in. Do not forget to download a Quick Invest app where you get the best curated list of bonds, which is showcased in terms of information, liquidity, transparency, and the best our own in-house model risk score. And all this put together gives you the best in-app investment process as well. Download the app now. And do not forget to sign up for our YouTube channel if you've not done so already.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR bonds. Download the INR bonds app to save better.